Hello.
Hello.
Oh, wow, we're complete. Good morning, everyone. Good afternoon. Good evening.
Good morning, Dr. Nurse Paul and traveling nurse. Hey, how are you feeling?
Just having our coffee. How are you, Anna? How are you, Kay?
I am doing great. It's Sunday morning here in New York. I know you're not in the US, or Paul.
Kay, I think you're muted. We can't hear you. Hello. Yeah.
Hey,
So I'm in Lisbon, Portugal right now.
oh, look at you.
Yeah,
I'm in my
and it's
living room.
yeah, it's quite chilly. It's 50 degrees. I love it.
Uh,
I guess let's. There you go. I think I can
Yay,
hear
I'm
Kay now.
alive. Yeah, even the computer wants to shut me up, right? It said, shut
Right, right.
up. Good morning, good afternoon. Where are you, Paul? Exactly. Where are you? I like your
Um,
background.
I'm in Lisbon, Portugal. So, in one of the cultural centers,
Yeah.
and this is the least busiest area, the busy area that I can find to stream the show.
That you can find.
Hey, wow.
Yeah,
What
yeah.
time is
So
it
I hope
there?
right now is about 2 p.m. So, yep, I hope it's not too, like, noisy as far as ambient noises are concerned. So let me know
Yeah.
if it's too loud, guys.
No, you're doing great. This is we can hear you. There's no static. No,
Yes,
Thank
no,
it's
you.
better.
Finally.
no. Texas is not hacking on your audio this time. So
Yeah,
Right,
Abby,
right.
yeah.
yeah.
I'm still sharing the show.
Me
Okay,
too. I'm still
But
sharing it.
share it, share
right,
it.
right. And
Yes,
welcome to
welcome
our viewers.
everyone. Mhm.
Yes, Miss Anna.
Good morning, good afternoon, good evening, everyone. Thank you for watching us. Please do not forget to share this show. You're gonna learn a lot. Sharing is caring. Even if you're in the U.S. already, or you have a dream to come in the U.S. to work as an immigrant, this topic is very helpful to save you more money. So please keep sharing. Facebook group, our live in YouTube. Don't be shy, right, Kay?
Yes, I have to stream this. I have to share this, right?
Right, right. We'll wait for you. She's
No,
Keep
still lagging
sharing
in.
you.
And
yes, no,
Kay
we're
is
good.
sick.
I know I've been
Kay, thank you for
Thank
joining
you.
us today.
sorry to anyone or everyone who's messaging me or texting me or calling me. I appreciate all your messages for the Thanksgiving. Sorry I haven't gotten back. We've been sick. Well, not very, very sick, but still alive and kicking and just
That's
coughing.
good.
It's the season. The kids are all sick, in school.
Right.
And the parents are the one who's getting hammered as well
Of
with the
course.
kids, because we have to be on call 24/7 for
Oh,
them. So,
And
yeah.
no
And
pay.
yeah,
trust me, I see,
yeah,
I work in
yeah,
the urgent care
yeah,
clinic, so I see
yeah,
like 40 to 50 patients every 12 hours. And there's a lot of
yeah,
RSVs and flu A's and flu B's and COVID and rhinoviruses, adenoviruses, metapneumo. I can name them all.
yeah,
So what I'm trying to say is, everyone, please be safe. It's that
yeah,
season in the U.S. If you're in U.S. where we get all these viruses, probably because of the weather, because it's cold.
It is,
hmm
yeah.
yep.
Yep.
And again, it's when you're surrounded with a lot of sick people, then yes, you will get it eventually. So
Yeah,
please
if
Right.
take care of yourselves here in the US.
you
Right. I'm
cannot beat
enjoying the
them,
weather
join
here.
them.
Right.
Okay.
And Miss Anna,
I,
what we're gonna talk about today? I think this is a very important topic for our immigrant nursing community, as far as taxes are involved. And this is our part two from our show last week.
Yes, Dr. Nurse Paul and Kay, aside from other topics, this one is very hot topic. I receive a lot of messages too. And as an immigrant, I don't know with the other countries, but from the Philippines, we were not taught about taxes. We don't know how to lower it. We don't know what to claim. So we're not gonna owe a lot to the government. Unfortunately, part of an American dream is paying taxes. and you have to do your own research and learn. So everyone, I would like to welcome you for today's insightful discussion about tax strategies. I just want to say a little disclaimer. We are not tax professional, but we are your disruptive nurse. And we would like to share our experiences, our
Right.
hard why, during the first few years, filing taxes, it's such a pain and headache for me. So today, we're gonna talk about tax strategies, and I believe that I was assigned to talk about the orders policy. I lose my notes.
No, but hold on. And as far as disclaimer is involved, before we move on to the next topic,
Yeah.
The disclaimer is also at the bottom
Yeah.
of our screen. We are not professionals. We are not
We are
tax
not
experts.
CPA.
We are not CPAs. We're not legal advisors. Somebody messaged me in LinkedIn. Are you licensed as an advisor? And we keep telling that during the show. We are not, but we are, say,
Exactly.
informed consumers. We are nurses that wants to be informed, that researches, that do our due diligence, but we are not providing professional services as far as you guys paying us for us to analyze your tax situation, especially with our topic today. It is still best to consult professionals like CPAs and EAs or tax preparers. So we're going to talk about them today as well. And also, I would like to invite everybody to share this show, tag your friends. There's quite a lot of people here. I'm a little shy because I'm introverted, honestly. But they're looking at me.
To be honest, NursePaul, to be honest, you look great. Look at him, Kay, right?
Yeah, I
He's
think it's the
glowing.
cold weather.
You're
I think it's the cold
glowing.
weather. All the pores are closed. No oil. I think I should do more outdoor live streaming. Sorry about that. I'm a little too loud.
Exactly.
They're looking at me. No, but I'm in Portugal and I'm using my American accent, so I don't think they like that. But obrigado, senor. But but they're looking at me and they're waving. But yeah, anyway, so that's it, guys. I think this is, for me, it's a vital talk because like Anna said at the beginning, when I was a new immigrant, it was also hard for me to understand taxes. I used to not do this in the Philippines. Somebody else was doing it for me. But in the States, taxes is not that complicated if you're new and you just have one job. But if you're not really cognizant about what you're doing, you're missing out on several tax credits and strategies to lower those taxes. And last week we talked about those tax credits, and today we're going to talk about strategies to even lower your taxes. Again, I'm not an EA, we are not an EA, we're not CPAs, but this is just from our experiences and from the nurses that we're mentoring as well. What about you, Kay?
Yes, so I have no idea about tax strategies or tax advantages before when I started as a new immigrant, as a single. When you're single, you're the one who's feeding the
Right, right.
American system, right? Thank you for the single people who work so hard, without dependents, who's paying the highest tax bracket, right? Because they have
Thank
no,
you.
they
You're
don't know
welcome.
what they're doing. Yeah, thank you
Thank you,
for
Paul.
supporting. Yeah, supporting the Medicare. Thanks for sharing your piece of for my mom's,
Also,
Medicare.
I'm paying for
Yeah.
school and I don't have a kid going to school.
Yay! Thank you so much.
School
We
tax.
love you. We love all the taxpayers. We
De
appreciate.
Yes.
nada, de nada.
Yeah. So when you look into it, actually, if you have a single most expensive thing that you pay in your life annually, it's actually your taxes. I have
That's
no
true.
idea about it. I have no idea when I started in New York City. Three layers of taxes are hitting us. No, actually, it's four. So the federal, the
Right.
the federal,
Right.
the state, the city, and then here you go, your what do you call this one? You will see Yonkers
Of
taxes.
course.
Yonkers. So what like Yonkers is like, part of that New York area. And then on top of that is your FICA, your payroll taxes. So we're getting hit a lot of taxes. I think my tax alone would go straight about 35 to 40% if I go overtime. As a single nurse, in New York without mortgage, without house, without business, without any deductions. It was really hitting me a lot. And our family, a very good family, mentioned to me, there are a lot of things that you can do. She's not a CPA also, but she is a bookkeeper in the United States. So those are the people you want to talk with, your CPA, your tax lawyer, your business people. They might not be your legal expert professional, but they have some knowledge. So
Right.
I took advantage of those, not really understanding that point, but I said, I'll follow what they're saying for now because I trust these people. Um,
Mm-hmm.
and then I promised myself to learn it. But right now,
Right.
it's the most important thing is to save me from this. And the good thing that we're talking about this is right now it's November. So if there are
Yes.
people who has not taken advantage of their
Right.
opportunities, you still have time. You still have about 1 month, 1 month and one more week left. So you got 5 more weeks to
And
fix this. 2023.
right. And Kate, correct me on this, and Anna and Kate. You can always amend your taxes within 4 years, right?
Yes. So
I
you can
think, yeah. So
Yes.
if you
You
feel
can
like we've
amend it.
shared something that's applicable to you and you are not able to um, get those credits in, talk to your EA and CPA. Please don't approach me because I don't professionalize my services for taxes. But I can refer you to friends, something like that. But you have 4 years to amend your taxes in through IRS. So
Mhm.
just look at that and see if you can evaluate your tax strategies. But also, I would like to emphasize that this is part two of our show last week. If you guys missed that, Kay and Anna, it is uploaded in our social
Mm-hmm.
media, Travel Nurse Hacker, Dr. Nurse Paul. It's also in my YouTube channel. You can always watch that and share that to your friends. We've shared a lot of stuff last week, and this is the continuation. And guys, please use the comment section. We want this to be very interactive. We're about to start with our first tax strategy for today. We talked about by Anna, but we want you guys to like interact with us today because, like I said, it's not all about me, Anna, and Kay's
Mm-hmm.
story. It's all about all our story in general. Immigrant nurses and even nurses that are just starting in their journey locally in the U.S. So I think we're all gonna learn from this.
Exactly. You can comment down below your question, your experience. Like Miss Sheila from VA, she always shares her insight. It's a very good
Right,
information from her. So everyone,
right,
please keep commenting. We're gonna try our best to answer your question and read your experiences. Right, Kay and
right. And
Paul?
maybe we can share the comment of Casey. Casey said, "This is an excellent topic. I rubbed
Mm-hmm.
myself in taxes just because I didn't know." That's the truth.
Exactly.
We're not vilifying IRS. IRS is our friend because they pour in money for our government, right? So we
Mm-hmm.
can have good roads and pay for the governmental services. But they're not going to tell you if you're paying too much.
Yep.
They will tell you if you're not paying a lot.
Uh-huh.
They're gonna say, "Hey, you owe us $1,000." You're
Yep.
gonna get that letter 4 years, 7 years later. But if you're paying too much, they're gonna be like, "Oh, thank you so much for donating to the government. We really love you. We appreciate your hard work, all
Thank
your
you, Paul.
overtimes, all the extra shifts that you picked up."
Yep,
But
exactly.
no,
That's
no
why
offense to IRS. I love
yeah,
IRS. I don't want the taxman to like knock on my door,
yeah,
but
so
I mean, I'm just being straightforward to all the people watching us. So we gotta find ways of how to strategize our
Mm-hmm.
taxes. But again, that's based on individual situation because you could be single, head of household, or married, filing separately, or stuff like that.
that's a
Exactly.
good point that you shared, Paul. Because I was telling everybody there is a reason why Uncle Sam is making you file your own taxes.
Yep.
There's a reason behind it. Okay, it's not it's cheap. It's cheap. It's free. And right now, if you belong to a specific income bracket, you can actually just file it online on the IRS website for free.
Mm-hmm.
You don't have to go
That's
through
true.
available retail software that you will have to pay. It's free, but again, sometimes free is not the best for everybody, right? So when I was using a cheap one, actually it's disadvantaged for me because there was mistakes that were done and it cost me, so I have to
Hmm.
pay penalty and interest for the mistake that was done. So it's very important to analyze and advocate for yourself, because free or cheap does not equate better option for you. You might be saving $100 from hiring a professional CPA or tax preparer, but then you're losing $1,000 or
Mm-hmm.
$10,000. So again, the topic that we're gonna discuss here are the perspectives of us as a consumer of this, consumers of this tax software, tax professionals, and what are the strategies that actually we're using. So stay tuned because it's gonna be very, very important.
You are definitely right. So first, are you ready to discuss the first one, the first strategy? So
But
it came from
I
us.
want to follow up with what I'm sorry. I want to follow up
Okay.
with what Casey said because
Uh-huh.
she has a follow up here. I,
Oh
I'm
yeah,
sorry. Am I
okay.
cutting?
Oh no,
Am I
no, no,
cutting?
you're not.
No.
No, you're
Yeah.
good. Good.
Yeah. Casey said, absolutely. I was single in New York. They killed me. LOL.
Just
And
like
she
you,
said
okay?
again, yes, sheep don't give you maximum deductions, Casey.
Mm-hmm.
Thank you for interacting with us, but you're right. And this is why we are doing this show, because we want to share what we based on our research, our due diligence, our experiences. But feel free to share your experiences as well, guys, so we can highlight it during the show. But again, Anna will talk about our first strategy for this show.
Okay. Crazy like you, I'm from New York, but fortunately I'm not single. So Uncle Sam told me a little, and then I woke up. So first topic will be health saving account and FSA or other medical expenses. So I experienced all of this. So I'm speaking personally from what I've done. When I was working as a staff nurse, I have a FSA, flexible spending account. So it provides a way to reduce or lower your taxable income by setting aside a portion or amount of your earnings. It is managed by your employer, and every year there's a maximum amount. So for 2023, it's $3,000. So how does it work? Remember, when you're newly hired nurse or immigrant, in your HR, they will tell you all the benefits aside from medical, dental, insurances. They will also tell you, hey, you want to avail the flexible spending account. So in your paycheck, it will set aside a amount of it, so it will lower your tax. So, but just a warning, FSA, you have to use it in a year because before I was saving, and I did not use all of it. So we lost 2,000 for it. But now, since I found out, I maximize using it by paying or buying blood pressure monitor, CBD monitor. You can use that all related for medical equipment, medical machines. If you have a sleep app, yeah, you can use that too. Or if you have a doctor's appointment, your copays when you buy medicines in Walgreens or CVS, you can use the flexible spending account. Again, if you are only a staff hired by a hospital, it is managed by your employees. However, a health saving account, this is a high similar to FFA, but this is a pre-tax, and every year also there's a limit. If you're single, you can contribute 3,850. If you're married or you have a family, you can contribute 7,750 per family. So how does it work? Health saving account. First of all, your insurance must be high deductible. Okay, if I miss something, but correct me if I miss something. But right now, as a traveler, we have our own insurance from a marketplace. meaning we're going to get it from our employer, from our agency that we work. So we got our insurance from the marketplace, and we avail the high yield health insurance. It means it's applicable for the health saving account, and we set a portion of it, and it has no expiration, and it will lower their tax deductible, their tax free, they're qualified for medical expenses. So few years ago, I've been getting sick in and out of urgent care hospital. We paid all our co-pays because of those health saving account. And during tax season, tax filing, we were able to use that, as well as the other medical expenses. So medical expenses, the IRS would allow the taxpayer to itemize or claim a deduction, but it really depends with your AGI or your adjusted gross income. They will allow you 7.5%. So we will not just ask how you're going to be able to compute it. It's going to be another topic, but just so you know, if you have a medical and dental expenses, keep all the receipts. So when the time comes to file for your tax, you can claim it, you can deduct it by using the form 1040 on Schedule A. So like what we said earlier, do not save money by filing the tax on your own. Ask the help of the professional so they can teach you and help you itemizing or the deduction. Remember, Uncle Sal will pay everything from you. But if you're an informed consumer and you spend a little money or ask for the help of the CPA and or tax preparer, it will save you more and it will give you more refunds. So for those people who have medical history, just like me, make use of your flexible spending account and your health saving account and itemize and save all the receipts of your medical and dental. Just a reminder, flexible spending account has an expiration. In a year, you must use all those money. However, health saving account, it's another way and a best way to use as for your retirement, but I will discuss that later. So that's it for me. Nurse Paul and Kay, if you can add more, if I missed something, help me out. Kay, you're mute.
Oh yay!
Yeah,
Yes,
there
I
we
was
go.
coughing. Sorry, I have
Yes,
to
yes.
I have to unmute myself. I was
Yeah,
coughing in the background.
I was
I
gonna
hear
add
her voice.
something, but you can go ahead, Kay, and add up something, and then I'm gonna follow you.
Yeah, there's a lot of great information that Anna
Yeah.
shared, especially the HSA. If you're
Mm-hmm.
healthy
Mhm.
and young, I always recommend checking out. Check out HSA. Leave it out.
Mm-hmm.
Don't leave it out there, because if again you're healthy, you're a nurse. Majority of us nurses and healthcare professionals, we know how to take care of ourselves. So we're educated. So our risk of getting sick is really lower than the average population. So what I'm saying here is, we're the typical people who will not go to the emergency room unless we're
Mm-hmm.
dying. I'd
Yeah.
recommend you, right, to check out HSA, Health Savings Account, because this can help you in the long run later on.
Right. And I'd like to add, I love HSA. I wish I'm what you call that qualified to do it, but I'm not. I
Mm-hmm.
probably could do it with my business. I haven't explored it yet. But let me tell you guys something about HSA first, right? And probably many people don't know this. If you're a full-time worker in your company, some companies offer free money. They're gonna say
Mm-hmm.
if you contribute to HSA or FSA, we're gonna give you $500 or $1,000 straight to your savings account, right? Many people don't know that, but that's free money. For me, a dollar is a dollar. If they tell me they're gonna give me $500 free for my FSA or HSA, I'm gonna
Mm-hmm.
get that because
Yeah.
that's free money. That's part. It's actually not free money. It's part of my benefits. But if you're not taking advantage of that, you're losing that money to your company, right? Another thing, if like what Anna and Kaya shared, if you're otherwise healthy and you don't need your HSA, do I still need to contribute? Yes.
Yeah.
Why? Because HSA is pre-tax. It can lower your gross income. Say for example, your income is 50,000. and you're contributing maximum and you're single, and say you contributed 3,000, the maximum is 3,850 for single. I'm checking my numbers as we go. So say for example you contribute $3,000 to your HSA, then that effectively lowers your contribution, I'm sorry, your adjusted gross income or taxable income to 47,000 instead of 50,000. That $3,000 is effectively tax free. Now, you put it on your savings, you did not use it because you're otherwise healthy, or you probably just see a doctor once in a while. You probably spent $100 this year for clinic visits or prescriptions and all that, right? Say, for example, you have $2,900 left or $3,000 left. That contribution can be, this is the most important thing that you guys need to know about HSA, and this is why I love this vehicle, can be put on stocks or investments like ETFs or REITs, depending on what broker you're using. And that makes money. The money that you make from HSA is also tax-free. So the contribution is already tax-free. When you use the money for your medical expense, it's tax-free. And when it earns money, because you're investing it, it's also tax-free. That's why they call HSA a triple tax advantage vehicle. So if you're not maximizing that in a year, you're losing those triple tax advantage. And here's another expert tip for everybody. Did you know that you can actually pay for your medical expenses out of pocket, and then you can claim it 20 or 30 or 40 years later when your HSA has already made money? Because the longer you put your money in there and invest it, the more you earn from compounding interests, which means the interest grow bigger and bigger over time because your capital is increasing. So say, for example, I spent 1,000 this year. I'm going to keep the receipts. I'm going to keep all the records that I spent 1,000. And 35 years later, when my $3,000 is already 100,000, I'm going to get that 1,000. Guess what? That effectively went down from 3,000, and I take 1,000, 33%, to 1,000 out of 100,000, 1%. All right. I don't know if that makes sense for you guys, but that's how I see it. So that is why we're talking about these things, because we want you guys to know about these things so you can be smart about your money. And this is not illegal. This is perfectly legal. IRS actually encourages you to do that. That's why they give it to us as tax-free. They want you to like have your own money for your medical expenses, but also capitalizing that to invest that so that your money grows when you're not using it, right? So that's it. I think I shared too much, and that can be a whole show by itself.
But for all, let me just remind everyone.
I am not providing professional services. Sorry.
You are not licensed only in RN and MP.
Kay is just sick today, but I'm pretty sure she wanted to share those things. So she just
I know, right?
So,
I want to add that, Paul, that you mentioned this, because we have HSA and we maximize it. You know, as soon as January starts for us, our family, January 1st, we max out our HSA. A lot of people will do, you know, if the HSA, they're going to divide it to 12 months and they're going to do it monthly payment, you know, to monthly contribution to their HSA for the year. What we do is we don't wait for the, you know, monthly. When we have that money already, that's our emergency fund anyway.
Exactly.
We call it front loading. Front loading is we put that money up front and it grows throughout the year. We don't wait until end of the year to maximize it. And then at the end of the year, it will just grow slow. So we start in January. And then good thing that you mentioned that you can pay out of pocket, right? We don't use it. You know, we probably visited the doctor. I personally have visited a doctor like more than, you know, together with my kids, more than 5 times this year. We never use it, primarily because we want our HSA money to grow, to compound interest, because the 8th wonder of the world is the compounding interest. If you have not known about compounding interest, you're going to be working until you're 75 or 80 years old.
There you go. Which is why we're talking about this, because we don't want that. Right?
We don't want that. Nursing is burning out, you know.
I'm gonna tell you something, guys. in France, they passed a law that says the retirement age is now 67. I'm not sure if this is correct, if my numbers is correct. Right now in the States, we're still at 65, right? The government today can change the retirement age from 65 to 70 if they want to, depending on the political climate, depending on the money of what money is left in Social Security and Medicare. Now, let me bring this question out to you guys. Do you want the government to dictate when you want to retire? Because I don't. I want to retire in the next 15 years. You know what I mean? And the only way I could do that is if I'm stable enough financially, and medical expenses is going to be the huge one when you're at that age. I mean, I'm already having neck pains and now I'm spraining my foot from just walking in Barcelona. I was like talking to my cousin, how did this happen? I used to walk 20,000 steps. When I'm working as an ER nurse, 15,000 steps is nothing to me. And now I just walk for a mile and I sprain my foot. But I don't want the government to dictate when I will retire. I will retire when I want to. I don't want to. I don't want them to tell me at 65, you know what? You can't retire yet because we're not going to give you your retirement fund. We're going to change the rules. You're going to retire now at 70. What if I have spondylosis at that point? What if I fractured my hip trying to lift my patients from the ER? What if I'm already having fan tremors and I could start an IV and they don't want me to work anymore? So that's something you want to think about, guys. HSA is that vehicle where it can invest for you, but also putting your money for your medical expenses in the future. And that's only one. And technically, IRS has already put out the word out there. But, consumers are not consuming this information because it's really not being talked about. But now we're talking about it in the perspective of a nurse. Whether you're an immigrant or local nurse in the US, this is something. I've only been in the US for 7 years, but I've learned this in my first year in the US. And I did not learn that just sitting on my bed and thinking about how I can grow my money. I learned that because I spent incredible time listening to free videos from Fidelity and from Think or Swim. What is this? TD Ameritrade and Schwab, and doing this free webinars and looking at YouTube and comparing articles from different sources. There is a wealth of information, and that's what we're presenting to you guys based on our experience and based on our research as well.
For all and play, I would like to answer one of the questions from Ria Ann about does AFA have expiration same like FFA I mentioned earlier? Like the health saving account, you can roll over it, it has no expiration. Like I said, he just uploading, front loading, right? And then he just leave it there. Unlike the flexible spending account, it has an expiration. It's upon these funds are using or losing, and it happened to me. I was not able to use the flexible spending account when I was stuck and we lose half of it. So there's a difference. Health saving account, you can roll over it, you can use it whenever you want, no expiration. But flexible spending account, use it or lose it. So take note of that. And just want to remind you guys, health saving account, you must be under the plan of high yield saving insurance. And flexible spending, you must be working in private with your employee in order for you.
I just want to correct, not high yield insurance account. It's going to be high deductible.
High deductible.
Yeah. HD. So,
high yield.
So you will look in your insurance plan. It will say there HD as in H as in high, D as in deduction or deductible.
Yep.
HD, high deductible, HD dash HSA compatible plan.
Yes,
So,
that's what you want to look for.
Yeah. If you have questions regarding what insurance plan you have, call your HR.
Benefits.
Yes, your benefits. A lot of this HR will not be able to give you a thorough one-by-one explanation for 1 hour. You have to understand HR people are managing probably one HR personnel to 100 employees. Imagine if 100 employees will call them. You're already complaining with 1 to 40 patients. Imagine an HR personnel handling 1 to 100 employees. So as a professional, bear with them if they cannot give you the whole shebang of information, but at least they can guide you what you have, and then you have to do your due diligence on that. You have to research yourself, because if you're just gonna rely on your HR benefits person to explain to you fully, your expectations are off.
Right.
Nobody will explain that to you
And
like that.
and and Kay, let me tell you this. I found out from different jobs that I worked at as a travel nurse, as a full-time employee, and even now, I know more than my benefits manager. I know more than them in the sense that I read the whole packet, and I'm just that person. I read the fine print. I don't read like 10 pages terms and conditions, but I do skim what I think I need to know. But when I ask them, they're just gonna say, you know what, call Fidelity because they're a servicer for 401k. You know what, call this number, call this number. They're like coordinators, but literally, Kay is right. Imagine my first job in the US is with UHS, which is Forbes 500, and all over the US they have 26 hospitals and all that. So they have more than 10,000 employees all over the US, and I'm the one asking questions. They probably don't know who I am at that point. You know what I mean? So the point is, it pays to be informed. When you're not an informed consumer, when you're not an informed nurse, especially in the financial aspects of our jobs, it hurts you. It hurts your finances. It hurts your retirement. It hurts your family. So think about that. And I want to answer this question, Casey. I think she's your follower on LinkedIn. She said, front loading, where do you put this money? Your company put the dollars on a card. Can we move this? So here's the thing with HSA and FSA. What Kay's saying is in the beginning, at the beginning of the year, she already maxes out her contributions so that she can have more time in the market, because time in the market is better than timing the market, which means the longer that you put your money in the stock market or whatever investment vehicles, the more that you make money. So the thing is, when you put your money, say for example, in your 401k or HSA, that does not automatically get invested. You have to go to your brokerage account. It could be an app or a website, and you have to set it up to where when you put the money, it will auto invest for you depending on your portfolio. In order to know this process, because each bank works differently, you have to call your brokerage if you cannot do it by the app or by website. There's usually tutorials. I mean, if you ask me about what to do with Schwab, I probably could answer that because I'm using Schwab. I do not know much about Fidelity. But the thing is, you can auto invest it. It's 2023. You don't have to go there manually to do it. Everything is automated. I mean, computers can answer you back now like a human AI, but we've been using AI in finance industry for a long time. So use that to your advantage. Automate those investments. That way you don't have to go and log in all the time. And Kay, I've noticed this with a lot of our immigrant nurses and even our local nurses. They thought they were putting the money in 401ks or HSA, right? Only to find out 2 years later, they're like, why am I not making money? Why is it still 3,000? Because you kind of like put it
Exactly.
in a bank, but you did not invest it. Those are two different processes. Putting money is not equivalent to investing. Put money and then automate the investing. So call your
Mm-hmm.
brokerage. I'm going to tell you right now, the big brokerages, Fidelity, Vanguard,
It's
Schwab,
what?
Bank of America, Merrill Lynch and Bank of America, Chase, JP Morgan Chase. Guys, they would be happy to
To help.
answer
Yeah.
your question over the phone. This is super free. Like in Schwab, I was on the phone with a lady when I was setting up my Roth IRA after I left my full-time job. I was on the phone for 1 hour. It was free. She set it up for me. They helped me navigate whatever I need to sign, taxes and all that. It's free. They would work with you. They need those money to be in their bank. So take advantage of that.
So I'd like to add there, good thing you Paul mentioned about making sure that your investment are actually
Yeah.
allocated
Mm-hmm.
properly. The way that I explain this to a 4 year, I mean a 5-year-old kid. Okay, so when you have a $20 bill, your $20 bill doesn't play at all. You have to go
Mm-hmm.
Mm-hmm.
to, let's say, go to what's a game station? Go to arcade, right? Let's
Vegas?
say, yeah, I know. Go to, let's say, right, Vegas. Not for adults.
Time zone. Time
For
zone.
time, time zone. Go to time zone.
Time,
Go to Dave and Buster, right?
Dave and
But you
Buster,
have
yeah.
to change that $20 into tokens. Okay.
Mm-hmm.
So the tokens now, you are going to put that in the machine to play it, right? To make sure that that money can grow or can go away, right? So, but our goal is to grow, right? So what we do with that token is we put it in the machine, and that's the time the money will only grow. But if you don't put it in the machine, the money doesn't grow, right? So the concept of investing is also the same. When you put that from your bank account, savings account, or checking account, you transfer it to your brokerage firm. Okay, so your brokerage firm does not invest it for you unless you're talking about, that there is a saying that they will invest for you, that they will disclose that, hey, when you put it here, we're gonna put it into, let's say, 401k, and we're gonna put it in target funds of 2045, right? Or they were gonna say, when you put it to your HSA account, these are the allocations that we'll put your money in, and we will allocate it automatically. Okay, so unless there is a disclosure like that, then you have to do it yourself, in manually. Or like what Paul said, you have to call your brokerage firm to
Mm-hmm.
make sure that those funds are being invested. So you're gonna call them, hi, my name is Kay. I'd like,
Mm-hmm.
this is something new to me. I'd like to inquire if the funds that I'm putting in my HSA account are being invested. And when they say yes, it's being invested on this fund, get the name of the fund and you can Google it up. Okay, so you can research on what funds are they putting it, because there will be like, a fund symbol or a fund name, and you can also always Google it up, right? So that's my addition to Paul's saying that, you have to allocate it. Don't expect things just to grow by itself. When you transfer money from bank account, checking account to those HSA accounts, you have to make sure that they're being allocated properly. Okay.
Right. And
Exactly. First,
also
you have to
be
fund. First, you have to fund. Then you have to invest. Two
right.
process, not one way. Not fund and just leave it. It will not grow.
Right, right. And another thing, be in the habit of checking your financial status at least once a month. Just be in the habit of that, because sometimes you wouldn't know if unless you're doing short term trading and it's gonna stress you. Don't do that. But that's a
That
different topic. But
that's
for you
me
long,
stressful.
yeah. But I have a habit of doing it once a month in the sense that I just want to make sure that everything's in place. I'm not going to touch my long term investments. If the stock market says we're down negative 10% today because the stock market crashed, knock on wood, please, not, but I'm not retiring it. But because of the war, say for example, and there's war everywhere and the stock market tank, I always remind myself I'm not retiring tomorrow. I still have 10, 15, 20 years to go, so I'm safe. The stock market always recover. But what I want to know is if it's still in place, if my bank did not sell it, or my bank did not close, or my account was not hacked. Trust me on this. If you have cryptocurrency,
We're losing Paul. Paul, you're breaking out. Your internet, or is it me?
uh, is it me? I'm back.
It's are you frozen?
I, I don't know. I'm gonna have to refresh.
Oh, well, he's fresh all the time. What he needs to refresh? You're on mute. Are you on mute too, Anna? Or is it me? Am I having
Oh yeah, I'm
difficulty?
on mute. I'm so sorry.
Okay.
I quit talking here. I was like,
Yeah, Paul is swallowed by got swallowed by Lisbon.
yeah,
Yeah. Somebody probably have seen him. Hey, let's gang up on this guy.
yeah.
He has so much money.
Because they can hear him talking about all about investment, retirement, and IRS.
Yeah, I hope Paul is okay though. So we'll just check on the clock. We have 15 minutes left. So I'd like to move along with what's the next? Is
Your
the
copy.
retirement.
Yeah,
Okay.
retirement contribution, another great way to lower your taxes.
Paul is coming back. Paul is back.
Okay,
Am I
Back
back?
again.
all is back.
So,
Back
something
again.
was happening. And my iPhone is about to die, but it's okay. I got another phone, so backup phone. If it dies again, give me like 5 minutes to set up.
Yeah.
It's just hard when you're mobile like this. But I don't know where I stopped, guys. I actually don't know what you guys heard last.
That's okay. So we'll move along with the retirement contributions, Paul. So we'll have time with the business contributions. Okay.
Yeah.
So I want to call this one. I want to share something, but let me see. Share screen. Window. There we go. All right. So share. There we go. You can see my screen, right? Okay. So when we're doing can you
Okay.
see? Okay. Can you
Okay,
see my
now.
screen now? Okay. So when you're talking about tax strategy on retirement, it's really understanding what it is first, understanding your taxes. There's no way you will understand tax strategy unless you understand taxation, in general. But this is a general waterfall. I would call it waterfalls of investment and tax. So you will see here, this is very, tax efficient waterfalls, because the first thing that you should really contribute to, if your company offers a 401k, you should, if they offer 401k and they match, okay, so the key word there is they match. During this economic, issues right now that we have, the inflation, this is something that you will have to call, because 401ks matching in 10 years ago, it's very different than 401k matching right now. Okay, so if you hear a lot of people saying, oh, I've contributed to my 401k since 15 years ago, 20 years ago, oh, they match 1-to-1. Your situation might not be the same. So what I recommend you is calling your HR, your benefits provider, and ask them. The simple question you want to ask them is that keyword, match. Do you have 401k matching? If the answer is yes, this is something that you want to consider. A good example here is when they say we're going to match 3% of your income. So if you're a person earning $100 an hour and you put there your 3%, so that's that's $30. That's $3, right? So when they say we're going to match 3% of your income, a dollar to dollar, it means that every $3 that you put, they're going to put another $3. So if you're going to put in at a tax rate, that is automatically 100% growth without you doing it. So there are three parts of a 401k. So we might make sure that they match. Number two is, when are you vested? So when you ask them about 401k, you don't only ask about match, you also ask about, when am I vested on it? If they say you have to work here for us for at least 1 year and you're vested, that's great. But if they say you have to work here for 10 years before you get vested, well, ask yourself, is this something that you are going to work for the next 10 years? If the answer is most likely, so take advantage of that 401k matching or 403 matching. But if not, if you are actually planning to live after 1 year or 2 years or 3 years, because you don't see this employer as a very good place for you for long term, then this is something that you might want to skip. Okay. But you can contribute, but it's just not going to be as advantageous compared to being matched. Okay, so again, number one step, call your HR. If they're matching your 401k, might want as well take advantage. Okay, number two, it says here pay off high interest debt, because interest in your credit card actually accumulates interest as well, and it can be compounding interest. So a lot of people really are paycheck to paycheck or negative at the end of the month, because they are not realizing how the compounding interest of credit cards hurt. So since this is the waterfalls that I always show to people, although this is not part of your retirement, but this high interest credit card can drag you down at the end of the road if you don't pay attention to those. So again, the first part, if it's a match to match 100%, then that's why it's number one here, because it's 100%. High interest debit cards, high interest credit cards can be around 24%, 30%. So if you have a credit card that's like that, you might want to pay that off as quick as possible. Okay, anything for me, anything above 7% credit card, and I have no business, it's something that I will consider paying off as quick as possible. Number three is what Anna mentioned earlier, is start your HSA. Because HSA, if you don't use it and you arrive on your retirement age, you can actually roll over those funds into your retirement account. Again, if you don't use up your HSA account, you have so much money in HSA and you reach that retirement age, you can roll over that to your retirement account. Your retirement account can be your IRAs, okay? You roll over IRAs. So those are the accounts that you can transfer it to. Number four is, let's say, it's related to number one. So number four, let's say your company, contributes only 3% of your 401k. So if you're earning $100,000 a year, so 3% will be 3,000 a year. So that's free 3,000 money a year. So majority of the time, the number one here means that contribute only up to the match. But since the maximum of the 401ks this year is 20, let's say 401k is 22,500, right? So if your company matches 3,000, then you still have around 19. I'm sorry, you still have around 18,000, right? Contribute. So this is number four. Max it out if you can. Okay, so those are the next step. Number five, I put there backdoor Roth IRA. Backdoor Roth IRA is recommended for people who are on the high income brackets. But if you are not belonging to the high income earners, I would say you have middle income nurse, let's say around $80,000 average, not $180,000 a year. You might want to consider doing your Roth IRA. Okay, so consider a Roth IRA. But if you are actually above the limits of Roth IRA, I recommend you going to your CPAs and going to your brokerage account companies and ask them if I know how to do the backdoor Roth IRA, because they will guide you. You will have to create your own traditional IRA account and you're going to do a conversion to that. So this is a little bit complicated for beginners, so I recommend you sitting down with your professionals to do it. Number six is invest in your mutual funds in taxable brokerage account, because the number one, the number three, the number four, and the number five, you have options there as deferred taxation, or it can be also post-tax. But number six, it's saying here that you're just gonna invest directly in your brokerage account. When you're retiring, there is called a long-term capital gains taxation. Long-term is anything you hold more than 1 year. So let's say I bought Apple stocks today. Today is November 26th. And if I'm selling that next week because I'm a short or day trader, that income or that profit will count as income tax. So I will have to go to my tax bracket for income tax, and I can be landing on a 20+% or 30+%, right? But if you are in the long-term gain tax bracket, then that is not going to be the tax bracket for that. It's going to be lesser. And I have seen so many people who have paid like less than 10% of their income or their profits from investing long-term. Okay. Number seven is real estate. So when you are retiring, your real estate actually comes with, with good benefits. Because your property taxes can reduce your taxation as well, and it builds equity. Unfortunately, when the tax system was revised during the former president's term, the amount that you can reduce on your property taxes now to reduce your taxes is around $10,000. Before is you can do multiple properties, and you can reduce up to 30,000. If you have so many, 60,000. But now the new tax revision was able to limit it to 10,000 a year. So if you're paying property tax of more than 10,000 a year, then for example, for us, we were paying about I think that was close to 14,000 a year for property tax a year. So we can only reduce the 10,000 portion of it. Okay, so be mindful of those. When you buy a house, you have tax advantage as well, and it builds equity. Now, number 8 is pay off low interest debt and your house. So since I'm talking about retirement, this is something that you don't we don't have to talk about the paying off your low interest debt. Mortgages, when we bought our property, we were around 3% interest rate. So for us, we are not in a rush to pay off our mortgage because it was only 3%, around 3%. But if you have a high interest credit card, 26%, 20%, that's your priority. Okay. What else you can get? Your retirement, Social Security. You can get money from Social Security. Look at your paycheck, and each paycheck you will have, it will say their FICA and it will say Social Security. So a portion of your money actually goes to your Social Security, which you can be used. You can use it when you retire. I believe 85% of that money, if you have 100,000 in your Social Security, only 85% of that will be taxed when you get to your retirement age. Where else you can get municipal bonds? These are government issued bonds that the money, you put your money to the government bonds, and then they will use that money to to build infrastructures or other government projects, but they will give you interest. Okay, so those are called bonds. And so long term, there's bills, there's bonds. You probably heard of that, and you can buy that from the treasury. Bonds, when you withdraw it, it's tax free. Okay, it's federally tax free, and sometimes it's also state tax free. So please consult your financial advisor, professional financial advisors, when you are purchasing these bonds. I have personally purchased the bonds a year ago, 2 years ago, because it went as high as I believe almost 9% when I purchased it. So it's huge. If I have a mortgage that's 3% interest, and I have bonds that time that was generating more than 6%. So that bonds growth actually is paying for the interest of my mortgage. So you don't have to work hard for that. Okay. So again, long-term investment have lower interest, lower taxation, or sometimes no taxation. So please consult your professional advisors for this. HSA is another option. Again, you can roll it over to your retirement, and yeah, that's the options that I can share you for retirement. There's a lot more vehicle out there, your IRAs, your Roth IRA, your SEP IRA for businesses, simple IRA, traditional IRA, so all the IRAs. So your 401k, 403, 457, and your thrift savings plan, TSP, for your federal government employee. So again, these are the things that you want to consider. So for me, if I'm going back as a full-time nurse, one of the places that I would consider as a high income earner or high tax bracket, I would consider going to government, primarily because they offer TSP or 457 on top of my 401k. So if the contribution limit for the 401k for this year is 22,500, next year is going to be 23,000, right? Let's say I have 23,000 limit for my 457 plan, and I also have 23,000 limit for my 401k. So that combined can reduce my taxable income to 46,000 a year. Again, reduce, defer, because I'm deferring it. By the way, another strategy that a lot of people actually do is, I forgot to show this to you. When they retire, you guys can see my screen, right?
Not yet, Clay.
Oh, not
No.
yet. Okay. All right. So let me see your screen share. Oh, not yet. Okay. All right, there. Okay. Can you guys see my screen now?
Yeah, now we can see it.
Okay.
Yep.
So a lot of people, if you notice, why does a lot of people move to Florida, to Texas, to Nevada when they're retiring? Because these are the states without income tax. Okay, by law, when you are taxed where you are, if you withdraw it and you're in Florida, you're gonna get hit with, Florida taxes, income taxes. But since you move into a state without income tax, so then you will not get, hit with income tax. So a lot of people have moved to those states without income tax, or actually tax-friendly states. So this is a state-by-state differences. So I recommend you contacting CPAs that are from this location, or just get a very experienced CPA or legal tax legal tax advisors to discuss this with you, because if you're in the retirement age and you want to take advantage of those tax savings, please consult your professional tax advisors, because there are ways why people move to this, to these places. There's a reason behind that, not only because of the weather, but also there are tax advantages. Okay, so that's my presentation on the tax
Wow,
strategies.
that's a lot. There's so many choices to choose from. All you have to do, nurses, is to educate yourself. Take notes. Thank
Right,
you,
right.
Kay.
And I think I'm going to go ahead to discuss my last strategy.
Mhm.
I'm down to 4% in my phone um, battery. If I get kicked out because my phone dies, I have the other phone as a backup, but that will take me like 2 to 3 minutes to get set up. But anyway, the last strategy is business. This does not apply to everybody, but think about it. You might have a business that you can start writing off your expenses for. And business doesn't have to be full time. You can be selling something online or providing services that you get paid for, or doing side gigs and offering something in Facebook Marketplace or selling something in Etsy or Amazon. These are considered businesses. And for businesses, for self-employed businesses, this can be advantageous as far as taxes are concerned, because you can write off several things from your for your business expenses. You can write them off of your gross income, so we can lower the income. That way we can lower your taxes. The goal is to lower your income, to lower your taxes. But again, we're talking about legal ways to lower your taxes. We're not talking about things that will get you in trouble. Okay, so here are some things that you can write off if you have a business. And I'm talking about this based on my own experiences as well. And I'm a business provider. Say, for example, I'm an NCLEX instructor online. So what could I write off for my business? First, office supplies. Do I need to buy um, pens and papers and printer papers and all that? So of course I need that for my business, right? When I sign my documents and all that, I need that so I can write them off. Software and subscriptions. Like for example, in my business, I'm more virtual. So I have a lot of apps or APIs or softwares that I use. My business is heavily reliant on these things, like StreamYard that we're using right now. So I can write them off, and it can effectively lower my business income. And because if I'm still considered self-employed, that also effectively lower my personal income. If you're self-employed, by the way, I have to say this first, you can mix your income from your business as a self-employed and your personal income W-2. So together you can combine them as your gross income. This does not apply if you have a complicated business already, where you're registered as an S corporation. Is different. Again, if you have small business startup, or you have a side gig, you can start writing off expenses, and this is what I'm talking about. So that effectively lowers your personal income because you can write off these expenses. So software. Another thing is rent. So for example, if I'm renting a 500 square foot of an apartment, and in a corner about 50 square foot is my office, right? So that's 10% of my house. If I'm paying $1,000 for my rent, I can write off 10% for my office expense. So which means out of $1,100 becomes an effective deduction from your income, because you're using it for business purposes. Of course, you cannot write the whole apartment off because you use the apartment for your personal use as well. Again, you can only deduct things or expenses related to businesses. All right. And you have to document these things properly. Let me see my battery. I'm down to 2%. You have to document these things properly. That way, when IRS asks for documentation, or we call it audit, you will be able to prove that. Okay, make sure that this is only business related and not personal related. Home office deductions. Are you using your phone? Are you using your internet? Are you using your electricity and water to run your business? If I'm doing that, I do a virtual office. So definitely I need electricity. I need internet. How much of the time do I use it for my business? How much of the time do I use it for personal? If I determine that 20 to 30% of the time I use it for business, or 40 to 50% of the time I use it for business, then I can effectively write off that amount of time in percentage from my actual expense every month. Travel and entertainment, if this is applicable to you, like for example, I would travel to meet nurses so I can interview them, or I could travel to get more education with what I'm doing. I'm attending a conference related to my business. That can effectively be a business write off as well. Certain percentage of it, again, not for personal use, it has to be business. Vehicle, if you're using vehicle for business, this does not apply to me as a business owner because my job is virtual. Employee salary, if you have employees, insurance premiums, professional services, memberships to like professional organizations related to your business, licenses, marketing, and advertising. If I advertise in Facebook and I spend $500 a year, that can effectively lower down my business expense as well. And education and training, interests, and all that. So there are many things that you can write off. Think of this thing. What do you need to run your business? Are you selling something from Etsy? So definitely you can write off your iPad, probably because you're using iPad for business, right? You probably can write off your camera that you use to take photo of your product, right? You can write off your internet, a portion of your phone to respond to those emails, your email expenses, your website expenses, and so many other things. But then again, if you're using it mixed for business and personal, you got to be able to separate what is personal, what is business. And at the beginning, IRS is not going to ask you, but when they see red flags on your income, on your tax filing, that's when they're going to start asking you. So just make sure, and this is important for nursing as well as for your finances, document everything. So when IRS asks, hold on, why did you write off $30,000 but you only earned 20,000? Why are you writing off 10,000 or negative 10,000? Why are we doing that? You got to be able to explain that. You got to be able to defend yourself on that. That's why it's important to work with enrolled agents or tax preparers or CPAs to get you situated and make sure that you're maximizing legal tax deductions. That way you can lower effectively your income. Okay, if that makes sense. I'm kind of like rushing because my phone is about to die. Okay, and Anna, you have anything else to add while I'm switching to another
No,
phone?
go for, I don't have a business yet here, but go for very informal info. As we all know, immigrants love to have a side hustle, like work from home, like you can sell something, a product, or like one of my friends, she loves to cook. So whenever she's not working as a nurse, she has a menu and sends it to the hospital and she cook and deliver it. So aside from being a nurse, she has other jobs like selling food, Filipino food. Like she told me, Anna, I can retire as a nurse because this Filipino food menu is very, a lot of people order from her, from the hospital, from different departments, ER, OR. So for those immigrants coming, newly arrived nurses, or while waiting for progression, learn how to cook or learn something side hustles while waiting for your visa because you cannot just always work as a nurse. So you can open up a business. Yes, you can open a business even if you're a new immigrant. You're not illegal. You have a green card. You have a social security. But first, equip yourself with knowledge, with information by tuning in and watching us every Sunday, DNP Unlocked. We are so willing to help you guys out and share everything what we learned throughout the year with our failures and with our success. Right, Kay?
Yes, Anna. So very important
I
that
think
there's so many we can do there. Paul is back. Did you change
I'm
your
back.
phone?
Yes, yeah, that's my phone. It's already dead now, so I always bring two phones. Guys, that's one travel tip that I'm going travel hack. Okay, always bring two phones because if you lose the other one is your backup to get you out of that country. But
Exactly.
anyway,
rich people problem. I only have one phone. We're not
Oh,
that rich
well,
yet. Yeah.
okay. Well, since I was already talking about it, this phone that I'm using is my personal. This other phone is business, so this is a tax write-off, right?
Yeah, even
And
the one that
of
you're
course,
that's holding it, the
the
tripod is
tripod,
also
yeah,
business
the tripod,
deduction, right?
right? And now because I'm using this phone to stream live, I can write off a portion of it.
Yep, there is equipment, even the car that you're going to use on the travel. But
Yes,
I also have business, so it's very important for you to
yeah,
understand that Uncle Sam is actually incentivizing those people who help his economy. If you're helping the
exactly.
economy of United States, Uncle Sam or United States taxation will be friendlier to you and will give you tax breaks. I put in the chat, if everybody's on the comments, I have put in there a link for the IRS where you can get information on small business. So not this one, go with the other one. I put their small business resource, www.irs, not that one, the other one. Sorry, this one is for different. Okay, there you go. Correct. So small business resource, go to IRS publication. Publications are the one that you can read, print it out, or go download it, and it's for free. IRS gives those resources for everybody, so you understand what you can do and take advantage of.
Right.
Again, this information is right on the tips of your, I mean, on your fingertips. It's up to you if you're gonna grab it or not.
Right.
So we were mentioning about itemizing in business deduction. So the next comment that I added there, the 2023 standard deduction. Okay, this is not for business. This is for personal. So let's
Right.
take example. You have no business. Can you itemize your expenses? The answer is yes. If you are, let's say, for example, you're a single and your expenses, your eligible expenses is more than 13,850 in a year. Let's say I got into an accident and my bill went to 30,000 a year, my medical bill. Okay, medical expenses are considered eligible deductions. So what you will have to do is gather all those receipts of 30,000 that you paid for and give it to your CPA, because they can, the CPA will tell you, your standardized deduction is only 13,850. So since you have 30,000 bill that you just paid, we're not going to use standard deduction. We're going to do itemized deduction. So even if you're not business owner, but you do have bills that are way beyond the standardized deduction, I recommend you sitting down with your CPA and have them consider itemizing your costs. Okay. But if your, let's say your expenses is only, let's say 14,000, and the itemized deduction, I mean, sorry, the standardized deduction is 13,850, you will only save what? $150. The CPA probably will say, don't itemize it anymore, because the $150 that we're going to save is going to cost you more for me to prepare that, because itemizing takes so much time. And the CPA will charge you more if you itemize. Some of them will charge you more, depends on how they bill you. But it does not make sense to itemize if you're only saving $100, $150. But if you're talking about a saving of $5,000 or $10,000 or $20,000, then of course it's ideal or
Right.
recommended to just itemize. But otherwise, go to standardized deduction. And if you can flash that again,
Right.
the standardized deduction, um, moderators. So again, for joint filers, married is 27,700. Okay. And then for head of households, let's say the single earner with dependents, or single parents, then your standardized deduction is 20,800. Again, but the good thing about having a standardized deduction, even if your expenses, medical expenses or eligible expenses only accounts for 15,000, you can still claim that 20,000 as head of household. Okay. So don't think that you will have to spend that amount of money to get that. Standardized deduction is Uncle Sam telling you, hey, you know what? I know you spend so much money as a consumer. Don't worry about it. We're just going to, fix that rate to that amount, and you don't have to give me receipts or anything. Okay. So again, if you're filing for standardized deduction, you don't have to keep all those receipts. But if you're going to itemize, like in business and personal, you want to keep all those receipts of expenses and give that to your CPA.
Okay, let me
Yep.
just add something. That itemizing for personal is separate from itemizing for business. For
Mm-hmm.
itemizing for personal, I believe it's in Schedule C. I may be
Mm-hmm.
wrong.
Here.
I know some of the people are commenting and correcting me as I go. But when you itemize for personal, it's different. When you itemize for business expenses, it's also separate. But again, combined together forms your gross income. And again, I'm only talking about self-employed businesses because S corp or corporation would add another layer to the complexity. So the more complex you're getting, the more you're going to need help of a professional. So make sure that you guys are employing services of professionals. Say for example, if I'm going to pay a professional $3,000, but it's going to save me time and money and get me refunds because of my deductions were maxed out and they know more than me, and I probably get 5,000 refund, then I still made 2,000. I mean, not made it, just my money went back to me. But it's like investing for services of someone who can do it better than you. But again, 80 to 90% of the American population would just benefit from regular standardized deductions and some W-2s. But then again, as your financial situation becomes more complex, that's the time that you want to require professional services. So that's what I can share to everybody.
Okay, thanks, Paul. There is a question on the comment. It says there, if they want to start a business, if you're new here in the United States and you need something that to dumb it down for you, I recommend. I recommend, this is a good book that I've used, also Small Business for Dummies, because that time I was learning these things. I really considered myself dumb. Dumb. I'm a
We all
dummy.
are.
So nobody was born knowing everything. So for me, I accepted that. So the one that really helped me, because it really dumbed it down to my level of comprehension, was the Small Business for Dummies. Healthcare professionals are not at all in any finance or economics um, context. So some jargons are very hard for us to understand. But if you tell us, give me gabapentin, I'm like, okay, yeah, I know that actually, but give me hydrocephalus. Can you explain to me what, total abdominal hysterectomy, bilateral sulfingo-oophorectomy means? Yeah, I know that. But can you talk to me about high yield savings? No. So there's
What
a
is
lot of
that?
yeah, right. What is that, right? What is
What is
APR?
Yeah,
What is APR? It's just a simple three
yeah,
word, but yes, I can explain to you the whole shebangs what a TABSO is. I'm like, there's just
yeah.
jargons that are hard for us to translate. So I recommend you getting those simplest book as you can to start with, to jumpstart. Also, I added in a comment about travel nurse or home health nurses. When you are working and you are visiting 8 patients in a day, this is where a lot of foreign nurses are getting screwed at, because when you have 8 patients to visit in a day, you have to log that mileage from that first patient to the next patient to the next patient to the next patient until you get to the last patient. You have to log that mileage is the odometer on your car. Okay, so you will have to write that. Document that, because those are deductibles. Again, when you go to your first patient and then you have to go to your next patient and you have to drive 25 miles, you have to record that, because there is mileage reimbursement under the IRS. And it's a bit 60 cents, if I'm not mistaken, around 60 cents or 67 cents per mileage that the company should reimburse you. Again, when you're in a visiting nurse, and the company will reimburse your mileages, your travel, so you will have to log that in. So if you're driving 25 miles, put that there. You started with 1,000 miles, you drove 25, so start mileage and end mileage. You have to write that down, and then the date. You have to log all those, and then at the end of the week, give it to your
Right.
employer, because they will have to reimburse you for those mileages. Now, the other
Right.
question that other people are asking me in Travel Nurse, Kay, do I have to save receipts for my RN licensure, for my hotel, stuff like that? So, as travel nurses, if you are getting stipends that are fixed, that is max stipends, um, and you don't go beyond that stipends, you don't need to submit that to your CPA, but keep the receipts just in case of an audit. But if the IRS sets you $1,000 maximum stipend every week, and you went $2,000, then you will have to give that receipts to your employer, because now this is called, falling under like the itemized. So you have to prove that you really did spend more than what the government standard is. A lot of people have asked me, can you go beyond the stipends? For travel nurses, if you're receiving travel stipends, housing stipends, and you go beyond that, it is legal, but you will have to prove that you really spend that exact amount of money, and you have to give that to your company. It's called non-accountable stipends. So what I'm saying here is you can do either go beyond or stay just within the standard, but you have to make sure that you have those receipts kept for you, for yourself, for your documentation. If they ask you, keep it. Now, for those professional reimbursement, like the company is reimbursing me licenses, right? Do I need to show my CPA those payments that I did for my ACLS renewal, BLS renewal, license renewal? Do I have do I have, can I itemize this on tax season? The answer is no, because uniforms you cannot, unless you're a business. Okay, so please consult your CPA on things. If you have question, which one should I deduct, or which one I don't have to deduct, but I just have to keep the receipts. Okay, so those are two
Right.
things: keep receipts or keep receipts and give to my CPA. So you have two options, and most of the time all you have to do is really just keep the receipts for in case of an audit. Okay, so those are for my traveling tips.
Right. And I don't know if you guys can hear me.
Yes.
Um, but yeah, I've shared some sources on the comments as well. Maybe we can flash it. But for those who don't like to read books, I like to read books if it's like Hunger Games or Game of Thrones or Harry
Twilight.
Potter. But uh, honestly, Kay, I'll be honest with you. I tried to read books with finances, but my what's this concentration
Attention
level is this
span.
short. Attention span. I probably have adult ADHD, but I don't like too much chatter. I want the juice. Like if I'm reading something about HSA, I want straight to the point, like forward right now. I want to know right now, something like that. Sometimes the books are a little narrative, and that works for other people. I'm just saying,
Mhm.
with me, what actually helped me when I was young was reading from internet sources and then make sure that they're reputable first, because I don't want to read from commentaries and opinionated and teaching me stuff that I shouldn't learn. But two of the websites that are my favorite whenever I need to check quickly. I have a lot of sites that I want, that I regularly check if I'm reading something about finances. But this can help you as well if you just want to do quick reading and you don't have time to read the whole book. And maybe we can flash that comment. It's investopedia.com. They have very good information about so many things regarding investment and financial services. And my number one favorite, this is my best friend. When I was new in the US, when I just migrated 7 years ago, is nerdwallet.com. So they have
Mhm.
short articles and they have links to services. I'm not affiliated with them. I'm not making money from all these websites, but just what I'm saying is they help me dissect many things that help me get started, as far as what credit card can I get started with to improve my credit score, or what is HSA, or what is FSA, or what is emergency fund, or even as far as what is FIRE, financial independence, retire early movement, stuff like that. So you can there's a lot of resources. You can message us. You can email me as well at info@drnursepaul.com, and I can share my resources to you. And soon my website is going to go up, and I'm going to share all the resources there as well. My website is 90% complete. But just what I'm saying, guys, this is why we're here. Nurse Anna, travel nurse hacker, and myself is to share these things to you. That way we can make it easier for you. We can make it much more comfortable for you guys to find these sources, whatever you're comfortable with, whether it's a book or a YouTube or a little article or a blog post. We probably have something to share to you. So thank you guys for like always joining us every Sunday, and thank you for tagging your friends in all our shows. But yeah, thank you, Kay, and thank you, Anna.
Yeah, what a wonderful topic to end the month of November. Reminder, we have no for next week. It's December already. Am I right? Or am I wrong?
Hold on. I think Kay shared the resource too. Maybe we can flash that as well. It's kind of long.
Real.
Yeah, it's kind of long. Yeah, because Paul said that his attention span in book is the same. We're the same, Paul. I
Yes.
cannot stay long on reading books, but
I
sometimes
love
I do
audiobooks.
too. Audible. I am
I
not
love
getting money
Audible.
from this, but I
Yeah.
do have audibles because when I'm traveling, I just play
Mhm.
it on my car. I love traveling, and even if I drive to work 1 hour, it's my
Guys,
me time to
is it
self-improve.
okay if I
Yeah, yeah.
You're
the
getting
Both.
cold?
The Filipino body? I took off my jacket earlier because it's like 60 degrees. It's now down to like 52, and I'm already like sneezing from too much cold. That's why I can't do New York, right?
Oh, it's
Because
30 over here right now. It's 30.
I can't do that.
Yeah.
It's like 52 here or 53, but I'm feeling like super shivering, and my coffee's as cold as my feelings. I'm just kidding, but
My feeling. Who
but
what?
it's cold. It's cold. It is really cold.
Yeah,
But
anything 27 degrees for Filipinos are cold. 27 degrees Celsius.
oh yeah. I think I'm still a Filipino after all. There's no doubt about that.
Yeah, so I'm saying here, if you
It's
guys are
really
into
cold.
real estate business, this is a good book. Yeah, Paul needs warm right now. So we're gonna
Oh
end
god,
this session soon, and we're gonna
this
start
is
showing what our December
this is
shows
so
will be like.
embarrassing. But I
Yeah,
took off my coat. I thought I could finish the show without a coat, but
you're
forgive
cute.
me, guys. But
You look, you put some mask in there. You look like Jafar. Exactly.
I know.
Okay,
All
I
right,
just want
guys.
to
Thank you
say
so
hi
much
to
for joining us.
Daniel
Danielle is
Talavera,
here.
nurse photography. Thank you for watching Casey and Miss Sheila, please. Thank you so much for your help, for your comment. And don't forget, next week, okay? December. Oh my God, end of the
Anna, hold on.
year.
I'm sorry, Anna. Guys, if you want
Good.
for us to talk about more stuff in DNP Unlocked, we're already lining up for January, February, and March. Please email me info@drnursepaul.com. Topics that you want us to talk about. It could be anything, as long as it's related to nursing. It could be financial related to
Babysitting, yeah.
nurses. Could be babysitting or stuff like that. Immigrating to the US could also be stuff like, mental health awareness or stuff
Mm-hmm.
like travel nursing, finding recruiters. We probably could talk about that. And if we can't, we're going to bring in guests. And that's what
Yeah.
Anna's going to talk about for next week.
We are so excited. The last month of year 2023, we're going to end with the band for next week.
Woo.
We have the following topics, and please don't forget to watch because we have surprise guests, very surprise guests. So, episode 11, a lot of people asking, Miss Kay, Miss Anna, Dr. NursePaul, what is the best place to start to work as a nurse and to start as a family? So, December 3, Sunday, 8 a.m. CST time, 2-3 a state. Like Paul, you guys are like New York.
I really can't do the cold. I'm happy to go back to Texas now.
But Clay and me, we love New York, but like what I said, we're gonna have a special guest on that day who will share our experience and our state. We're not gonna always share our New York right here in Maryland. So please tune in December 3, Sunday at 8 a.m. CST time. And I would like to say thank you to my friends. Thank you for this today.
But Anna, let's also share our calendar for December.
Or the whole December, yeah.
Because we're gonna have holiday season. It's holiday season, so we're not gonna be here all Sundays because of Christmas and New Year. So we're gonna have 3 shows this December. Episode 11 is going to be choosing a state. This is very, very good for nurses that are planning to immigrate to the US and are not yet here. There's a lot of you guys out there. We're here to help you. And December 10 is also is going to be about finding a house, whether you're renting or buying a house. And this is gonna be exciting. This is applicable for anyone, whether immigrant or local nurses in the US. We have followers that are, not immigrants, but they're from US, but they're still following us, which is good. This is gonna be for you guys. And December 17, I think this is applicable because it's open enrollment season, right? Medical insurance jargon. And we're gonna talk about copays and deductibles. And what are these? I love it. And and we're excited to host these shows for you guys. Thank you so much. And again, I'm streaming live from Lisbon, Portugal, and it's cold.
Before Paul turned into frozen pain, let's wrap it up. Thank you everyone for watching. Thank you for sharing. See you next week. Thank you for my friends Kay and Paul. Have a good day. All warm.
Yeah, I need to wear my coat and get some coffee. Kay, thank you so much, Anna. I love you guys. Thank you every Sunday.
Love you guys. Love
you. Kay is sick, but she's here. Thank you so much.
Yeah, I made it. I've been coughing on the background, but that's why I'm just like covering myself. You see me like doing like this, I'm coughing already. But
I'm gonna write you a test
we're here
when I'm back, okay?
Yeah, we're here to survive you. Yeah. Through sickness and health, till death we apart, right?
Oh.
Right, but we're here. We're here. We love to have you here. We love you to share this information, free information. To care, sharing is caring. So please invite your friends to join us next week, and see you again, guys.
Stay warm, all. Bye, Kay. Feel better.
Bye. Thank you.
Friends.